I've been in the real estate industry for 6 years, and before that I was in the media industry. Basically, my YouTube channel is about mixing real estate, adding a bit of media, and hopefully I'm going to teach you how to do stuff in a fun way, in a way that everybody can understand. We know that, fuel prices go up, but we don't really know what that means for, our disposable income at the end of the month. So hopefully my YouTube channel is going to help you guys navigate through life in a more conscious manner, instead of just going with the flow and then hoping that your salary comes in before you go completely broke. If it were up to me, we would be buying property, mock property, in life orientation class. Okay, so a lot of common issues that people face when they're trying to buy a property revolve around qualifying for a bond, because the average South African needs a bond to buy a house. So the bank is the one that will grant the bond, but in order for them to grant you a home loan, you need to either be employed, permanently employed, provide proof of income in the form of 3 months bank statements, 3 months pay slips. If you're self-employed, nobody tells you this, but if you're self-employed, it's even harder to buy a property. You need 2 years financials. You need to have your bank your business. You need to have 6 months pay slips for your, not pay slips, 6 months bank statements for your business. A lot of people who are self-employed do not have any of that stuff. They don't even have a company registered. You need letters from your accountant. I mean, tell me if your friend who runs their own business has all this stuff together. They don't, okay? So if you're thinking about buying a property and you're self-employed, you need to know that you're going to have to take a 2-year journey. It's going to take some planning, but if you want a house, you're just going to have to do it, because nobody's going to give you money unless you do. The other alternative is to just buy the house cash, which is a great idea, but who has that kind of cash lying around? So sometimes we get confused by terms like bond, home loan, mortgage. Here in South Africa, for some reason, we haven't really decided on one term, but all of these mean the same thing. So some people will go mortgage loan, some people will go home loan, some people will go a bond, but it's just one thing, You can't get one in addition to the, it's one thing, okay? So when you are investigating buying a property, first step you should take is meet with a bond originator, or call one up, or go online and just Google bond originator. This is the person that's going to help you figure out how much you qualify for if you decide to buy a home based on your current circumstances, your current income, your current expenses, and disposable income. But one thing you should always be wary of is utilizing the maximum that the bond originator says that you can actually get. If the bond originator says you can buy a property for 1 million rand and qualify, do not go buy a property for 1 million rand, okay? Half that. Go for a property that's 500,000, because when the interest rate goes up and you've maxed out and gone for 1 million, you're going to be in big SHIT, okay? Because when the interest rate goes up by 0.25%, that's a couple of extra hundreds. Unless you've got extra money lying around at the end of the month right now to cover your bond if it goes up, a couple of hundred rands, don't go in at the maximum. Always work on, prime plus maybe 2 or 2.5, or prime plus 6. If you can still afford that house at 16% interest rate, then buy that house. If you can't afford the house at 16%, don't look at that house, because if things go bad and we go, I know it's unlikely that we'll go to 16%, but to be honest with you, the way things are going in this country, it's very difficult to predict whether or not we're going to stay at 10%. Are we going to go up as high as 13% mix? It's hard to say how bad things will get. So you just want to make sure that you prepare for the worst and you're comfortable. So if the petrol price goes up, interest rate goes up, you can still afford to live in your house. You don't want to be one of those people that have to put their property back on the market because you can't afford it. So one of the questions I get a lot, especially from first-time buyers, is what costs are entailed in buying a property? And then, they forget to ask what the costs of maintaining the property are once you have it. So to get the property, you need to obviously have the purchase price. You need to have the transfer costs. These are the costs that go to transferring the property from the current owner to you, or into your name. There's bond costs. So if you need a bond, then you need to pay bond registering attorneys to register the bond into your name. If you don't need a bond, then you just have to worry about the transfer costs. These are non-negotiable. If you're VAT registered and it's a VAT transaction, you're going to have to pay VAT instead of transfer duty, but you still have to pay the actual costs themselves, because those go to the attorneys for all their labor, petties, postages, deed searches, all that stuff. You don't have to worry about it now. It's all clout. Once you get into the process, you need to make sure that you're asking the right questions. Don't just go in blindly. So you've got purchase price that you need to prepare for, transfer costs, bond costs, and then once you get the property, you need to worry about obviously your bond repayment. You need to worry about paying your city of Joburg or whatever municipality you're in, the rates and taxes. These aren't just, numbers. You don't pay your rates and taxes, you get your services cut off. Everybody in the Republic of South Africa has to pay these taxes. And these taxes are calculated based on the size of your property, based on the value of your property. So you'll find that maybe your house is smaller than, your parents' house on a farm, but you're paying more just because you're living in a city. There's just a lot of things to navigate and a lot of costs to bear in mind. Maintenance. You won't believe how much money it costs to maintain like 50 square meters of grass. You need fertilizer. You need to make sure you've got somebody to cut that grass. Don't fall into the trap of buying a freehold property if you've never, ever, ever had to be responsible for anything living. Because everything around you will die. The grass will die. The plants will die unless you spend money to keep it alive. Having a home will drain you. You need to be prepared for it. You need to plan for it. It's not child's play, okay? Once you move out of your parents' home, I know we're all excited about moving out of our parents' home. But if you can stretch it, okay? Your parents love having you at home. Stay there, okay? Only buy once you're ready. And if you're going to buy a property, you need to move. Like your parents live in Soweto like mine do. You work in Waterfall. It doesn't make sense for you to make that commute every day. You're spending 2.5 hours going to and from work. You're going to rent in an apartment or you're going to buy an apartment. Lock up and go. Don't buy a garden unit. You can't maintain the garden. You're always at work or you don't earn enough. Buy a 2-bedroom. 2 bedrooms are always better than one. I'll go into all of these things once you start going into more of my videos, but you just need to make sure you subscribe so that you don't miss any of my videos. But I can go on about this all day.